Have you ever heard of the gap trade? In the Forex market, traders use this strategy each and every week to determine which direction the market may head all week long. And it works like this. At the open, at the beginning of the week, if prices gap up, you expect it's going to reverse and go down. If prices gap down, you expect it to reverse and go up. This is a very popular strategy in the Forex market. But what I want to share in this video is that this very same thing happens in the futures market each and every day at the open. And if you can learn how to trade a gap trade at the open of the futures market, you can very easily grab 1 or 2 points each and every day. So in this video, I'm gonna show you exactly how the gap trade works in the futures market. So you can grab 1 or 2 points and begin to increase on the Sutton. Let's go deeper. Hey guys, JD here. In the futures market, there's a very easy strategy that anybody can implement really easy, whether you're new or seasoned. It's an open play. All right. So in the futures market, there's something that happens at the open, and I'm going to go deeper into that. But first we need to talk about what's the futures market. Well, futures market, there's different instruments, okay, or there's different assets in the futures market. So I can only talk about what I know about, right? And so I trade the S&P 500 in the futures market. So that's an index. So the futures market has index like the S&P, you have the Dow, you have the NASDAQ, you have the Russell. All those are stock index that are in the futures market. Futures market also, you can trade commodities. You know, there's corn and metals, there's gold, there's silver. You know, you can trade that. So there's different instruments. They also now have crypto. You can trade Bitcoin, you can trade Ether. So in the futures market, you have options. All right, you have a lot of options, and what you're doing is you're buying a contract. Each contract is worth a certain amount of money. So for instance, in the S&P 500, when you buy one contract, let's say you're trading the micro S&P, right? So one contract, you need $50 worth of margin. So you need at least $50 in your account for most brokers. And it can vary by broker. But for most brokers, you would need or broker I use, which is Ninja Trader, you would need at least $50 in your account to trade one micro S&P contract or ES contract. So that contract is worth $5 a point. All right. So just for a little overview. So one contract, you need at least 50 bucks in your account. Then you can trade one contract, and every point is worth $5. All right. So if you were to go long and the price of the S&P rose by 5 points, you would make $25. Right. Because it's $5 a point, 5 times 5, 25. Right. But also in the futures market, those points are actually break down in tick. Every price movement is one tick. So it'll go 0, 0.25, 0.50, 0.75, 0 again, that's 1 point. So it's actually 4 ticks. So 1 point in the S&P mini is actually 4 ticks. And so you need to go, you know, sometimes you can risk 1 point in a tick. And so just so you know, all right, just a little overview. So you have to know which market you want to participate in, right? Because futures is, like I said, I didn't even cover half of the instruments that you could trade in the futures market. But again, for this particular strategy that we're going to talk about today is just for the S&P 500 index, the micro or the ES, as it's called. If you're doing a mini S&P where you need at least $500 of margin to trade one contract, and every point would be worth $50. Okay. So if you have a big enough, account, or big enough, your resources are deep enough, you can make some really good money in futures once you get to the ES level. Cause 1 point is $50. So if you can just net 2 points a day, you're making $100 a day. And so the upside in the futures market is great. And another thing I love about the futures market is that, once you're growing your account, let's just say you take 3 trades a day, you can always only take 3 trades a day, but you can scale up by just buying more contracts. So that's a wonderful feature of the futures market, is that you can, once you have a strategy that wins consistently, and let's just say you have a cap of 3 trades a day, it's wonderful. You don't have to take more trades to make more money. In the futures market, all you have to do is buy more contracts. And when you're up to 5 contracts or 10 contracts, you know, hey, this is how people make $500, $1,000, $2,000, $20,000 in a few minutes. Okay, because many times in the futures market, you're not in the market that long. It doesn't take that long to go 1 point, you know, unless the market is really slow. And on a fast day with high volatility, you know, you got to be careful, because it can go 1 point in the blink of an eye. Okay, so futures market, I love it. It's wonderful. It's a great market to begin in for beginners. It's a great market. It's safe. Again, when you place a futures order, right? And I'm speaking from NinjaTrader. That's the broker I use. When let's say I buy 1 contract of the micro E-mini, right? I probably didn't say that right. It's probably just micro ES, probably is how I'm supposed to say that. Let's just say I buy 1 contract. When I buy that contract, my order goes to the exchange in Chicago, and I'm buying, it's matched with somebody else who order went to Chicago, and hey, winner take all, right? But I don't have to worry about the broker taking the other side of my trade, or I don't have to worry about that market manipulation. All right, so the futures market is great. As far as that goes, it's a level playing field. Everybody has the same prices. Everybody see the same price. It's not kind of like in the Forex where, you know, one broker has the price of the euro this here, another broker has the price of euro here. Also, I left that out. You can trade currencies in the futures market. You can trade the euro in the futures market. So again, the futures market has a lot of instruments, have a lot of assets you can choose from. But all right, let's get to the strategy. So what I have noticed, and what you will notice, and you can do this with practice, you don't have to risk any real funds to test this strategy out. All right, you can grab a broker, get on a demo account, paper trading account, and test this strategy out. And you will see it happens like all the time, right? So the market for me opens up at 9:30 Eastern Standard Time. The futures exchange is in Chicago, so on their time, I believe it's 8:30. When it's my 9:30, it's their 8:30. Okay, so depending on where you are in the world, you know, it's really based on the market opens up at, you know, 8:30 Central Standard Time, because it's the Chicago Board of Exchange. All right, so the futures exchange is in Chicago. So you will notice, here's the strategy. It's very, very simple. You will notice if you watch the open, I mean, you have to be, in my case, I have to be at my computer watching at 9:30. I really sit down about 9:20 and see what the market has been doing, right? I put my 21 EMA on my chart as always, okay? And I'm just looking to see, are we trending down, trending up, or are we in a range, all right? Once you see what's happening just by using the 21 EMA before the market opens, like I would say start this at about 9:10. 9:15. Just see what the market has been doing from overnight to currently, right? If we're under that 21 EMA, it's been trending down. If we're above that 21 EMA, we've been trending up. If the EMA is in a roller coaster going through prices, it's been ranging through the night. All right. So let's say that the market has been in a downtrend, right? The market has been in a downtrend. Here's the strategy. It's so simple. This can get you 1 or 2 points every day, right out the gate. 1 or 2 points out the gate every day. When the market opens, whichever direction it goes first is going to reverse. It does it nearly every day. Whichever direction it goes first is probably going to reverse. All right. So here's the strategy. Let's say it was coming down, right? Say we've been in a downtrend. So that means we are looking for a sell opportunity. Okay. We're looking for a sell opportunity if the market was under that EMA when it opened and from overnight. Now, so right at the open, what we want is some type of push up, right? We actually want to sell, but at the open, we want to see the market push up because it normally is going to reverse. Whatever it does first, if it pushes up first, it's going to go short. If it pushes down first, it's going to go up. So our overall plan in this case is we're looking for a short because the market was under the EMA. We saw the trend down. So if that market pushes up to begin right there, that's kind of your confirmation or your confluence, or that's exactly what you want to see. If that market pushes up, you know that it's going to reverse and continue that downtrend. So after it pushes up, all you have to do is wait for a price action entry, which in this case would be a second entry short or a lower high. That's what you would look for. You would look for a second entry. So you want prices to push up and create that second entry short off the EMA, or you want prices to push up, come down, go up, come down, and make that high, lower high with a beautiful signal candle going short. Because the market was going short, and because when it opened, it shot up, we're expecting it to reverse and get back with trend. All right, that's it. That's the strategy. It's very simple. If you just practice this and take a look, at the market, you will see it does do this all the time. Whichever way it goes first, it's probably going to reverse. All right. So that first initial push is actually the trap. They trap traders, who trying, because everybody's actually trying. A lot of people trade the open. Okay. A lot of people trade the open. So they're trying to trap, it's high volume at that exact moment. So they're trying to trap as many people as they can. So they push the market up one direction and then reverse it. But that does have to be your story. Do not fall for the trap. Okay. Do not fall for the trap. Go with the overall trend always. Even if it looks like it's pushing up currently, more times than not, it's going to go back to the original trend it has been in all through the night. Now if it's a range phase situation, then just always take your range phase setup, off the bottom or off the top. If it's in a range, it probably will stay in a range, even after the open. So just handle that. But let me give you the example going along. So let's say the overnight, it's been trending. Early morning, we've been trending up. You clearly see we've been heading up, right? When the market opens at 9:30 Eastern Standard Time, whatever zone you're in, you want to see it go down first. We want to see the market go down first, and then we want it to create some sort of second entry long or higher low to get back with trend. All right, that's the strategy. It's so simple, but if you trade the open this way, don't do the first thing you see. Wait for it to align with the overall trend. All right, don't fall for that initial trap. It loves to push one direction, trap everybody, and then get right back with trend. All right, and that is the open. That is a open strategy that you can use in the S&P 500 futures contracts market. And if you study this, you will see that this happens basically pretty much every day. All right. So this is an easy strategy for the futures market to be able to grab 1 or 2 points right at the beginning of the open. All right. So that's my spiel for today. This is a great time to like, share, and subscribe. I greatly appreciate you guys hanging in. And for staying this long, I do believe I have a trade example for you. So we'll go over that trade example and catch you on the next one. All right. My name is JD. And as always, I wish you increase on the sudden. Bye-bye. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. JD here. So the market is about to open and we're going to be looking for our patented reversal open trade. So we see we're in a little downtrend. So when the market opens, we actually wanted to push up, touch the EMA, and actually give us a push up, first entry push up, second entry short to go with trend. So we'll see if this all plays out. All right, then we're about to push down. We'll go 1 tick under. We're in. I'm looking at a second entry short here. 2-point scalp. No, we weren't able to get our runner on that, but good trade.